Welcome to TradeSpoon. My name is Karpel. I'm CEO and founder of TradeSpoon, and today I'd like to go over current market conditions and trade of the day. Disclosures are very important. Please read them. You can always pause the screen if you need more time to read the disclosures. If you're new to TradeSpoon or you're new to trading options, I encourage you to visit optionsclearing.com for risk and suitability, understanding risk and suitability trading options. All right, let's go through some specific examples. First, let's look at the stock forecast toolbox. This is one of our main models. It's more of a momentum model. It only looks at the pricing data, technical data, open close of high low of each day, and makes prediction based on neural networks. Looking for the next 10 days, market model is slightly bearish, basically showing that the market is overbought. 391 level should hold, 395 overhead resistance. We came close, 392 was today's low, and now we are trading off of our low, or actually at 392. So very close to the support. I think the support level will hold. We do have a Fed decision. We have GDP data. We have earnings from Apple, Microsoft, Amazon. So very important week. I would say this is probably the most important week till the rest of the year. That I think will set the tone for the rest of the year. For the next 6 months, going into the Fed decision, model still sees negative downtrend. So we are trading in the bear market. We are trading in long-term downtrend, which by definition basically means that this is not the low, and we're probably going to post a new low in the next few months. Meanwhile, market going to this ABC pattern, right? Probably strong A, recoil, B, pulling back, and I think we're going to have again, depending on the Fed decision, but assuming there is not going to be a very negative surprise by Fed or GDP or Microsoft and Apple and Amazon, kind of a status quo, then from technical perspective, down test back to the downtrend. We broke the downtrend, trading 389, 387, and then another leg up in the market. So something along those lines, I think, is the core scenario. Right, reaching 410, best case scenario 420 level, and then start trading lower. Again, some of the economic data, we talked about PCE data, is inflation data, that's extremely important. GDP number is extremely important, and the Fed decision. So a lot of volatility this week. I would probably encourage you to have beta less than 1. I'm taking advantage of the current market volatility by selling iron condors on the stocks that are announcing earnings, like General Motors. Liquid names, relatively low PE, paying dividends, rich cash flow, and I'm able to collect using the calls and puts 19 cents. So in this example, I collected 19 cents, which is on $33 stock. That's 75 basis points by holding position, 1 or 2 days. One way I propose to hedge is buying inverse ETF. I know some of the subscribers are not comfortable trading options. They're not comfortable shorting the stock. So that's why the inverse ETF have been created, not leveraged ETFs, but so SH. It's 1-to-1 on the downside. It shows uptrend for the next 10 days. And I think the rally will probably either reach mature level this week or maybe another week or two. And finally, please join us on YouTube. Click on subscribe, search for the word TradeSpoon, click on subscribe button and join us live. No financial commitment, it's free. Every Wednesday, morning bell and closing bell, you can participate live. Click on subscribe button, you get market updates every day. And please share it with your friends and family, or if you're part of any forums, trading forums. Thank you very much and have a great day.